Welcome to Market Wrap number 131. Stuart Williamson here at the helm. Greetings from a chilly UK. Just to let you know why we do this sort of thing, we just do it really to spread information and let people know a little bit about what's going on in the UK market so they make buying decisions whether to buy or not to buy. Completely your choice. As ever, we're just giving our opinion. Okay, we're up to 130 of these, so hopefully giving a fair amount of information out to clients and potential clients. It's just disseminating information we have researched. This week we cover the Market Wrap comments from last week, and then we go through Zoopla, Savills, JLL and Knightfrack's contradictory views on what's going to go on in the UK market. One thing we do agree on where interest rates are going, which is down. Thanks for your comments on last week's wrap. Now Ed G talked about the OBR saying that UK house prices will fall across the board by 10% over the next 2 years. Thanks for your comment, Ed. What they actually said, and it was reported in the, I think, This Is Money Mail on Sunday, which is not to be trusted as an outlet, and that has been, if you look at Wikipedia, they confirm this. They say house prices could fall between 9% between 2022 and 2024. The fall is driven by increase in mortgage rates and the economic outlook. OBR warns of significant uncertainty over the forecast due to bond volatility. Okay, bond volatility. That is what's caused interest rates to go up. Since then, the new Chancellor has calmed the markets, and we've seen a fall in interest rates. And Zoopla is now reporting that mortgage rates look set to return to more affordable levels. Their view for 2023 is that underlying costs of fixed rate mortgages for lenders currently has fallen from 5.5 to 4.1% since early October, when that report came out. The average 5-year fix is likely to level out now at between 4.5% and 5% according to 2023. Also, the housing market's reduced reliance on high loan-to-value mortgage finance products will also encourage people to move. 60% loan-to-value is the average amount of lending that people have. Okay, in the UK, that's because they built up so much cash during the pandemic and basically paid off debt. The problem is going to be for people with high levels of debt. Okay, they do expect a high level of house price falls, Zoopla. They're saying 5%. And some people will continue moving because of the ability to use the equity. So the 10% predicted by OBR is not necessarily the case. Okay, Barry Chewer asked me if I was wearing lipstick from the night before. Let me clarify, Barry. Huffington Post reports, when it comes to style, few people's tools work better than well-applied lipstick that matches you and your complexion. So I can send you my brand if you send me an email. Charity funders thought my shirt was too loud, so today I'm going for a bit of a more subdued approach. So what does Savills say about what's going on in the market? Their view is that overall house prices and transaction numbers have begun to fall. However, the rents are continuing to climb. House prices fell by 0.9% in October, according to Nationwide, and this is the biggest fall since June 2020, taking average house prices back to April 2022 levels. They say demand is easing and higher mortgage rates are kicking in. Transaction levels were high in September, suggesting that buyers have brought forward their completions to lock into lower interest rates. Interest rates were agreed before the mini-budget. According to the Bank of England, mortgage approvals fell back to pre-pandemic levels in September. Also, they report that surveyors are continuing to see fewer inquiries and new instructions, according to the September RICS survey, Royal Institute of Chartered Surveyors. And the most recent portal data shows demand falling through October and fewer sales carry on. At the same time, from a more positive perspective, mortgage rates have now become close to their peak, as swap rates have been declining since mid-October. So mortgage rates have peaked and are now coming down, agrees Zoopla. Although the Bank of England raised interest rates by 0.75% in November, they're saying that lenders have probably priced this in already. So rates are falling. In addition, we have a number of mortgage products is beginning to recover. There's far more mortgage products out there. Those who have a higher loan-to-value ratio are going to still suffer. Okay, there are for 75% to 85% loan to value, there are 66% of the previous levels mortgage deals available. For those at 90% or above, it's well below 50%. So that is what's going to constrict the marketplace, lack of lending at the higher levels. If you go on to Savills, they expect house prices to fall by an average of 10% in 2023, and that transaction volumes will be substantially lower during that period. It's a general drop, and it's not reflected regionally. Both house price growth and transaction numbers are expected to show improvement in 2024. The other main significant change in the markets is that the Help to Buy scheme has just finished this month. Annual house price growth was strongest in the year to July in South Wales, up 22.5%. In Newport, 19.7% in Merthyr Tydfil, and on the other side of the coin, Aberdeen City was the only place to have house price falls, 2.5%. Savills 5-year forecasts are 11.7% for the North East, Humber, Yorkshire, North West 11.1%, Scotland 9.5%, and London down by 1.7%. Now, if we compare this to the JLL report, their view is, and I'll quote exactly, the outlook for the UK city centres is much stronger. House prices are still expected to grow in the centre of many of the UK's largest cities. Central London is predicted to grow at the highest level of house price growth of any UK housing market in the next 12 months, with values forecast to rise by 2.5%, completely at odds with what Savills are saying. Redley's strong performance is driven by a significant shortage of homes for sale. Prices in central London are then expected to steadily rise through the whole 5-year period to 2027, with a cumulative price growth of 20%. They say across London as a whole, the continued and long-running housing undersupply is expecting to worsen. JLL also forecasts that construction will commence on just 83,000 houses over the next 5 years in all city centres. They expect all cities to outperform London by 10 to 15%. JLL forecasts that construction will commence on just 83,000 new homes over the next 5 years in city centres, which equates to just 32% of the 260,000 homes that are needed in that period. Manchester and Birmingham are expected to be the next strongest housing markets in terms of price growth, followed by Edinburgh and Bristol. All of these cities have seen demand significantly outstripping supply in the period since COVID-19, as students and young professionals have looked to return to the UK's major cities. Flight to space is finishing, recession is here, get back into the office. So that's an interesting contradiction between Zoopla, Savills and JLL. So let's look at the Knight Frank view. They say a turning point in the market early in December was when Nationwide reported average UK house prices fell by 1.4%, following October's 0.9% fall. These consecutive falls leave little doubt that increased mortgage costs seen in the autumn marked a turning point in the mainstream housing market. So it's all about the mortgage costs. The change in market conditions has also been reflected in the Bank of England data on mortgage approvals, showing that a fall of 10% in October, bringing below 60,000 for the first time since June 2020, which corroborates what Savills are saying. Now the 10-year gilt yields have fallen back below 3.3% from a high of over 4.5% in mid-October. Mortgage markets are stabilised. However, the effect on buyers' purchasing power is reflected in market metrics from 20CI. These show that across the housing market as a whole, newly agreed sales in November were 23% below the first 9 months of the year, even accounting for the seasonal nature of the market. Those prospective sellers already on the market have been quick to adjust their expectations as the number of housing price changes increased by 85%. Overall, these numbers support our view that the average UK house price could fall by 10% over the course of 2023. However, on the basis of current interest rate forecasts, we expect those losses to be recovered fully by 2026, as affordability pressures gradually ease from the middle of 2024 and more buyers are brought back into the market. They don't believe it's going to be the same fall across the market, as JLL are saying cities will be stronger, but you have to make your own decision, obviously. It's just a plethora of information at odds, but the point is you can't time the market. Same with stocks and shares, you can't time it. It's about time in the market. So I hope you enjoyed that. I hope you found it useful. It was rather quick, get through quickly, a lot of information out there. Please do like, subscribe, fill in our information request form below if you wish. Hope the shopping is going well and look forward to speaking again next week. Subscribe and like, please. Special thank you to one of our subscribers from this week for his comments. Jack, they were great comments. Thank you.